The Indian rupee is at its weakest ever at 77 rupees to the dollar, below 77 rupees to the dollar, ending at an all-time low, declining over 50 paise since the last closing. What does this mean and what's its impact? Here's this special report.
The rupee weakened to an all-time low today of 77 rupees and 46 paise to a dollar.
The Indian currency has depreciated almost 5% in just the last 6 months, as it stood around 74 rupees per dollar in November last year. There are several connected reasons behind the slump.
A combination of low foreign funds in India with a rising requirement is pushing the rupee down. Indian markets have witnessed the highest ever recorded foreign fund pullout this year, with $17.7 billion being withdrawn in just a little over 4 months. Foreign investors have remained net sellers in Indian markets and have withdrawn money for each of the last 7 months. The war in Ukraine continuing for the third month, lockdowns in China followed by soaring inflation and rate hikes across countries are all factors pushing investors back to safe investing destinations such as the United States. An uncertain environment has turned investors to the US dollar, that is considered a reserve and a safe currency in times of global stress. A soaring demand has taken the dollar to a 2-decade high, further pressurizing the rupee's value. And lastly, a 15% increase in the price of Brent crude prices has further resulted in foreign currency outflows in terms of import payments.
If this remains for the rest of the year, we can intuitively see that the overall cost of imported oil would go up by around 4.5 billion rupees. So there's a direct relationship between exchange rate and our overall import bill in rupee terms.
Apart from impacting markets, the rupee's depreciation drives up the cost of living, affecting the prices of essentials for the common man. When the rupee depreciates, everything we import gets more expensive. As for $1 worth of products, we now have to pay more in rupees. Already soaring crude oil prices will now translate into even larger payments in rupee terms. And increasing oil import prices further translate into higher domestic fuel prices, which have a cascading impact on overall inflation. A higher cost of transportation in turn pushes up the prices of all essential products. Along with this, the cost of foreign studies and foreign travel also increases with the rupee's worth reducing. But there's an upside too. Indian exports now get more competitive as foreign importers now have to pay less in terms of their currency. The Congress hit out at the Prime Minister digging up his old tweets and videos before he became the PM, and had then said that the weakening rupee was in ICU.
With no signs of global supply disruptions easing amid the war, the pressure on the rupee is expected to continue. This will hurt the common man who is already struggling with price rises across commodities. Priyanshi Sharma for NDTV.